Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Candice Miller, who is a tax attorney and partner with Azurvan Tax Law. Welcome, Candice.
Thank you. I'm happy to be here.
So, Candice, tell us about your background. What made you decide to get into law and tax?
So, since the time I was a child, I knew I wanted to be an attorney. And my parents used to joke with me and say that I was very argumentative. that would be the perfect career, and that's exactly what I wound up doing. I did not come into law school with any passion for tax. It was a happy accident. Our school requires that you do a clinic, or you fulfill that requirement by taking a class and an externship. Clinic's the easier route. All of my friends had interest in these different clinics like human trafficking, immigration. I also had a passion for those things, but I knew that's not what I wanted to do. And the way that you get placed into a clinic is by lottery. Okay. So at the time, I felt, if I were to pick one of those clinics, I could potentially take it away from somebody who has a genuine interest in doing that. But nobody I knew wanted to do tax.
Right.
And the clinic director and I spoke, and he was like, we don't have a lot of applications. So I said, okay, I'll do tax. I know nothing about it. He ensured we didn't need to. And that's how I got into tax law. From that moment, I realized how tax law touches every individual and every business across the United States. Oftentimes people think about tax and they think about businesses, which I understand. But there's a lot of implications that tax law has on people who don't make a lot of money, on immigrants, on human trafficking victims, and certainly for businesses who are hiring and employing individuals to pay them. So it became a niche that I really enjoyed doing, and then I stuck with it.
Right. So what is it now that gets you excited and really, in the morning when it's time to go to work, that gets you fired up, to make a good day of it?
Well, there's several different things. One, I'm very excited to be a partner now, which makes a world of a difference when you have control over your own caseload. That's really exciting versus just doing work for somebody else. For me, that's very fulfilling. The other I would say is that a lot of my clients don't understand the implications, but they're genuinely good people and they're trying really hard to fix whatever issue has been created. So the advocacy part is really enjoyable for me, being able to also help plan, because I think a lot of times in other areas of law, you come in for a problem, you fix the problem, and you send somebody on their way. But with tax, there's no real fixing the problem unless you can also create a plan to avoid that problem from occurring again in the future. So there's this immediate fix that you have to help with. And then there's sitting down with a business owner or with an individual and walking them through how can we avoid this issue from occurring again, and walking them through that strategy. So it's more comprehensive, which I really enjoy.
I know lots of times, when people run into tax problems, they kind of, I'm going to say, bury their head in the sand and hope that it goes away. Obviously, it never does. Can you talk about, why it's important not to bury your head in the sand and hope that this issue goes away?
Yeah, so the immediate consequence of doing that is interest and penalties continue to accrue. I mean, penalties will max out at some point, but interest will continue to accrue no matter how much you ignore it. The other thing is, a lot of times, if you catch it earlier on, you might be able to fix it. There are several cases we got where somebody has a very large liability, which can easily be remedied by submitting a document to the IRS. It's which if they would have done when they first got the very first notice, would have relieved a lot of the headache they might have later on. The other consequence is dealing with collections. You know, you don't want to wait until you have a levy and somebody's going after your bank account and garnishing your wages. Also, passport revocation is a large one. If you have, you know, believe 50,000 or more, they'll go after your passport. We've had cases where somebody's freaking out because they have travel plans and are like, oh man, I can't go because my passport's been flagged. And then they're forced to deal with it. So, I mean, I think the first takeaway is don't be afraid of the IRS. I know the IRS is scary to a lot of people, but they're quite easy to work with. If you call them, um, assuming you can get through, that can be the hard
Well,
part.
yeah.
But once you get through to somebody, you know, generally speaking, they're very easy to work with and they will walk you through what the issue is and how you can fix it. The IRS also has the Taxpayer Advocate Service, which is free to individuals, businesses, and oftentimes attorneys. We also use the Taxpayer Advocate. You can reach out to them and you can say, hey, I don't know what I'm supposed to do. This is the situation. They'll walk you through it. And that's a really great thing to do because, again, you might be able to fix the issue very easily and then not have to deal with it. The other consequence of waiting is then having any refund you could potentially have taken every time you file. And then also, if you wait too long, you might not be able to get any of that money back if you're outside the refund statute. So that is a really big one that a lot of people ignore, you know, because they might think, oh, it's only been a few months, but before you know it, it's 3 years later and or 2 years later, depending on what the situation is, and you can't get that money back. And so now, you know, you've basically given the IRS free money because you just ignored the problem.
Yeah. So really what you're telling everybody is, hey, you need to be proactive about this
Yes.
because if you're not, you know, you're going to lose a lot of rights
Right.
in other things because you're not taking advantage of things while you can.
Yeah. And, you know, that to build on that, though, also, if you can't afford an attorney, which I think sometimes is also the holdup, is that you don't have to go to one. You can utilize free services. There's a taxpayer advocate service, as I've mentioned. There are low income taxpayer clinics that you can use. You can go to the IRS website and it'll direct you to these different resources. And then I know, you know, here in Maryland, there's also the MBLS, which is the Maryland Volunteer Lawyer Service, where you can get free representation with an attorney. And all of those different routes, while they might take a little bit of time, if you call the IRS and let them know, hey, I'm working on getting an attorney, they'll usually give you a hold on collection activity while you're facilitating that so that you have time to get representation that's free. That way you don't have to pay out of pocket. So, you know, that's another thing I would say is if that's the holdup, if it's not dealing with the IRS, if it's paying for an attorney, there's several free resources the IRS puts out there that people can take advantage of.
Right. Now, there's payment plans that you can set up with the IRS. There's also what I'm going to say, I'm going to call them scammers that are out
Yeah.
there that are saying that they can settle things pennies on a dollar.
Yes.
Can you talk about some of that?
Yeah, so we get a good number of our phone calls start with, you know, I spoke to XYZ company and they said that they can settle this much money for this much. The reality is that that is very rare that they will be able to settle that much for that much.
Right.
The process for that, you know, with anything with the IRS when it comes to collections, you're going to have to submit financial documents unless you're under the $50,000 threshold. For businesses, it's a little bit different. But if you're under a certain threshold, then you don't have to submit financial documents. They'll give you a number and they'll say, this is what we think you can pay. And if you can pay that, then great, very easy. If you can't, that's where there's a holdup. So both for trying to get into an installment agreement, which is that payment method,
Mhm.
and also trying to get into an offer, you're going to be submitting very similar documentation. Offers tend to be more robust in what they're asking for, which is what you're talking about, settling for pennies on the dollar. So let's say a business owner owes, you know, $100,000 for their 1120S they filed or their 1120, and you want to get them into an OIC, then you're going to submit a very robust packet,
Right.
a ton of documentation, the last 6 months of all of your bank account information, credit card information, asset expenses. Essentially, you should expect to be able to submit your profit and loss statements and all documentation that proves that those statements are accurate at the same time. And then you usually also write what's going on, like what caused it, what's the situation, to add some more of that empathy to
Right.
whoever's reviewing your offer. You don't have to do that, but you should. But that process alone is very burdensome. And unless these companies are doing it absolutely free of charge, which I doubt that they're doing,
Right.
it's very costly, or it can be. And then even if you do all of that, there's no guarantee that the IRS will accept it. In fact, most of the time, it's going to get picked up 6 months later. You're going to have to resubmit a lot of that documentation that you've already submitted so that it's showing your most current financial situation. And then you're going to negotiate with the offer examiner, and they're
Right.
going to push back on whatever you offered. So if the business owed 100,000 and they say, well, we can only afford to pay you 15, you're going to go back and forth with the offer examiner, and they might fully reject it. They might say, no, we think you can pay 30. Whatever the situation is, they're going to go back and forth. So there's, paying that company to settle pennies on the dollar. Just know that there's no guarantee that that can happen. And if they're promising you that, then they're probably not reputable,
Right.
and you probably shouldn't give them your financial information. In that sense. The other thing I would say that you miss out a lot of times working with a company like that is the strategy part. So you might get the bandage part, and maybe you can get an offer. But if they don't advise you on your ongoing tax responsibilities, then that offer that you got into could then be revoked because you fall out of compliance. And a lot of people don't know that. So working with a tax practitioner who is familiar with how the offer process works and how the IRS process works is going to be far more valuable than working with a company that's promising a quick fix that is in no way quick and not guaranteed to fix the problem at all.
I think it's important, to look at it that it's like, okay, first we have to stop the bleeding, which
Right.
is creating that plan to make sure that this doesn't keep happening.
Exactly.
And then we can try to bandage you up and fit, and then, whatever,
Right.
set your legs straight. But I think that so many people would just, again, it becomes overwhelming, and they go into their
Yeah.
cocoon and hide. And what you're saying is like, hey, don't do that, but also be careful with anybody who's saying that they can help you out of these problems.
Yeah, exactly.
I know that I've had people come to us and have been like, oh yeah, I paid these people $10,000 and they're supposed to do it. And it's just like, and it's kind of heartbreaking to hear that the people have been taken advantage of. And it's really, I really wish somebody would do something about the advertising that they're
Agree.
doing, because I mean, to me, it's so false. I mean, I don't know of anybody that's actually settled pennies on the dollar.
I agree.
Yeah. Um, from a business standpoint with taxes and so forth, what are some of the biggest mistakes that you see the business owners making?
Yeah, so there's two. I'll start with the first because timeline wise, it makes the most sense. A lot of business owners don't understand the difference between the legal entity and how it's treated tax wise.
Mhm.
So when you create a business with a state, there's a default way that the IRS will treat that business for tax purposes. And oftentimes the biggest one is somebody who creates an LLC but then wants to be treated as an S corp, and
Mhm.
they won't do an election timely. So understanding that when you go to somebody, if you don't do it yourself, if you utilize a service or whatever else, if you are opening up a business at the state level, that you discuss either with a tax practitioner or with the IRS, or you do your own research when what forms you need to file with the IRS if you don't want the IRS to default treat that entity a specific way tax wise. Because if you're making over a certain amount of money, electing to be treated as an S corp could be far better financially than being an LLC. And I think people throw the word LLC around. I think it's such a great entity, and it can be starting out. I think it's definitely better than being a sole prop, so that
Right.
you have some liability protection. But if you plan on running payroll, if you have the money to be able to do that and pay a consistent salary that's reasonable for the job that's happening, then it might be better financially than to elect to be treated as an S corp. If you want to bring somebody in and there's two of you, then discuss, okay, maybe a partnership is a better option. Maybe S corp is. If you plan on scaling very quickly and you want to at some point go public, maybe C corp. There's so many options, and it's not tied down always by the state entity type. With that being said, it also can be, because certain entity types at the state level, you can't file a form and elect to be treated differently.
Right.
So if you in your head have an idea of what type of entity you want to be treated tax wise, if you're on the opposite side, then you need to understand what entity you should create at the state level in order to be able to elect for that tax treatment at some point in the future. So I think the number one mistake is not thinking far enough ahead, for how you want to be treated tax wise as a business, and not revisiting that at any point as a business owner, because it might be appropriate and the best option in the beginning to be an LLC, and then a year later, based on how much money you've made and maybe you've grown quicker than you thought, it's going to be better at that point to revisit, hey, should I switch to a different entity type so that I'm saving more money tax wise? So that would be the first mistake, and that's more of the planning and then coming back to revisit your business plan at a later time.
And that's where it's important to make sure that you have that business attorney and that
Right.
CPA that you're working with, that both of them can work together and
Yes.
be proactive in this planning. And you need to talk with them, and you need to let the two of them talk.
Yes,
Because
exactly.
many times people try to hold everybody in a silo because they think, oh, if the two of them are talking, I'm getting billed twice. And it's like lots of times in my experience, if you're
Mhm.
letting the two of them talk, neither one of them are billing you because they're hoping that
Yeah.
you do things the right way.
With that being said, also connecting, if you have a good bookkeeper, which I think that's hard to find a good bookkeeper, but if you're able to get a good bookkeeper, but you use just a CPA for your tax filing and not necessarily for your bookkeeping, having your bookkeeper and your CPA talk with one another is extremely important,
Yep.
because it's going to streamline your tax filing process. It's also going to maximize you being able to save on your taxable income, you having to pay less tax at the end of the year, because your CPA is going to do certain things, or maybe they plan out in their head how they're going to file a return. A bookkeeper may not understand that process. Oftentimes they don't. But the CPA can say, hey, I need you to categorize these expenses a certain way. And that is super valuable to a business owner, because oftentimes there's not a good bookkeeper. They go to a CPA, they say, hey, I need this done. And a CPA is like, great, I need expenses for the last year. And
Right.
we have to now reconcile all of this. And you're asking me a month before the deadline to file this return. And it's not reasonable, and it's just not going to happen. So you're going to have to file an extension, and now you're helping them do that. And then also they have to then prepare for the next year, because they're going to have to start doing their bookkeeping for the next year. So if you are, creating an entity, like you said, having whoever's helping you communicate with your tax practitioner, and then also having a bookkeeper, if you have one that's not also your CPA, communicating with whoever's going to be preparing your taxes, that is valuable. And that oftentimes does not happen.
Right. Right.
Aside from that part of it, the other major issue that we see time and time and again is not depositing your employment taxes on time. It is by far, in my experience, the number one issue that businesses have. For a business owner listening, or anybody who might be interested in this, when you file your form 941s, which is you saying, hey, IRS, I paid somebody wages, and here is my FICA information for that person. Here's what we have to pay. FICA is the Social Security and the Medicare. It's usually matched if you're an employee. If you get a W-2, you pay around 7%. They pay around 7%. That goes to the IRS. Time and time and again, that doesn't happen. So oftentimes the business owner will either not file the form. It happens quarterly. It's supposed to be filed 4 times throughout the year. And then you're also supposed to be making deposits. And depending on how much money the business is making, Those deposits could be semi-weekly, they could be monthly. A lot of people file them incorrectly. They just file them quarterly with their Form 941s. And the problem with that is you paid the tax, but now you're getting hit with penalties for late deposit. You're getting hit with a penalty for late payment. And with that also being said, setting up an online electronic, I don't remember the exact acronym, but your electronic payment method with the IRS is super valuable as a business owner. A lot of times businesses will just mail a check, which is fine. But if the IRS doesn't get the check in time, then they're going to put a penalty on you. Now you're fighting with the IRS saying, oh no, I mailed the check in time, but they didn't receive it in time. And that can just create a headache you don't need, having to clear up that something was submitted on time. So the takeaway there is, if you're a business owner, if you're paying wages, make sure that you are filing your quarterly Form 941s. Make sure that you are depositing on the correct schedule. And if you don't know how to figure any of that out, then utilize either free resources or connect with a tax practitioner, whether it be a CPA or an attorney or a preparer. Usually, most of them can answer, not all of them, how you can achieve that. Something else that business owners should know with that is, if you utilize a company like ADP, which a lot of businesses use, if you use a payroll processor who does these things for you, that's great. However, you have to ensure it's happening correctly. If you're using one of these companies and then you're not really paying attention to whether or not it's actually happening, the other big issue we see at the individual level is that businesses, even if they close down, are going to get assessed with trust fund penalties. The IRS will come after an individual business owner individually for that FICA not being paid or remitted to the IRS. And so I think a lot of times that's also missed by business owners. They think, well, I have a business. If I close the business down, I just won't have to worry about taxes. That's not true. That's not how that works.
They follow you.
And even if you don't close the business down, if they're trying to collect from the business and they can't get that money, they're going to come after you for it. Right. So that's also, extremely important when discussing the employment tax issue. But that is by far the most common issue that we see.
And the penalties and interest on those trust fund taxes are way, way higher than anything else that's out there.
Yeah. And yeah, I've had situations where every single quarter, a business is paying their quarterly taxes. They're remitting it with their Form 941, but they have extremely large liabilities because they're not doing it on the proper schedule.
Yeah, the other mistake I've seen business owners make is they're using an online service for their bookkeeping and so forth, and they think, oh, I signed up for payroll, so they're taking care of everything for me. And it's like, no, that's you didn't pay for all of the service, so they're not filing the tax returns, they're not depositing the money. You have to physically go in and tell them each pay period, whatever, to do it, and that's not happening. And then same thing, it's all that big cycle of not having the taxes paid and then getting hit with all the penalties and interest on that.
Yeah, I agree.
So, Candice, we've covered a lot of stuff here quickly, and I think that what we've talked about has been extremely important for business owners to understand. Legal structure, and tax structure aren't always the same. So that's extremely important. And going through that, make sure that you have an attorney that understands this, that's helping you, and don't go to your next door neighbor, because what they did for their business 20 years ago isn't necessarily what you need to do for yours. What have I not asked you wish I had? And there's a lot that we could talk hours about all of this, but what have I not asked you wish I had?
So I think another strategy that's often underutilized by practitioners, by individuals, by businesses, anyone who's helping somebody who owes money or anybody who owes money to the IRS, is seeing if you're eligible for penalty abatement. Sometimes you do genuinely owe the money, but maybe there was a situation that prevented you from not paying necessarily, but maybe not paying on time. So you have a penalty that you're assessed with.
Sure.
It's very rare situation, so it's not going to apply in every situation. There is what's called first time abatement, which people can utilize. They can ask over the phone with the IRS and say, hey, am I eligible for first time abatement for these penalties? Just know you can only use that one time. So make sure it's worth it. Make sure it's a very large penalty that you might want to use it on. Is, if you're a business owner and you fall ill and you're the only person who's able to file your returns, no one else can, you do it all yourself. If that's your situation and then you file late and you get hit with a large penalty because of it, you can file reasonable cause penalty abatement, and you can say to the IRS, hey, it's not an excuse that I filed late, but I fell ill. I quite literally could not file this return on time, or I couldn't facilitate the payment on time, and I'm the only person responsible for it. Here's the proof that I was ill, meaning you're in the hospital, you are incapacitated. There's something that's preventing you from actually being able to carry that out. And sometimes they'll extend it to other situations too. Maybe there's a close death in the family or something else that momentarily threw you off. You can ask the IRS for penalty abatement and maybe get that removed, which can be substantial because the penalties can be very high. So if you're somebody who that was the situation, maybe you think you have a good reason for why you didn't file or pay on time, and you have some substantiation documents that show that. I would try to utilize that. Ask a practitioner, ask your CPA, say, hey, is this something I can maybe be eligible for? See if they can help you out with it. Because if so, it could help reduce that tax liability a lot.
Right, right. No, I think that's great advice. Candice, if people like what they hear and they want to talk to you, get more information, from you, how can they reach out to you?
Yeah, I can be reached at Azarban Tax Law. If you Google Azarban and Associates or Azarban Tax Law, that's AZARVAND. Or at my email is Candice.Miller at Azarban Tax Law. And that's CANDICEMILLER. That's how you spell it. So if you need to talk, or even we do free consultations, so there's no charge for us to just talk through something. That's where I can be reached.
Great. Candice, I really appreciate your time today. I think that you have given our listeners a lot to think about and some good advice on how to move forward with things. So I really appreciate your time today.
Well, thank you, Gary, for inviting me on, and I'm really happy I got to talk about tax for a little while.
Great. Hey, this week my guest was Candice Miller, who's a tax attorney and a partner with Azarban Tax Law, and I'll see you guys next week.